Zimbabwe cash crisis worse.
Talking about Venezuela once again.
Systemic important banks. They removed the one factor you do this thing called monetary awareness.
Next recession.
Recession will be
Will be a recession.
We're going to hit a recession.
The date of the next recession.
a U.S.-only recession typically lasts 8 to 10 months, but a lot of things about this particular one have not been typical. So
A crash is coming now, whether it's 6 months from now, 12 months, 36 months, no one knows.
I go to bed every night, I dream of another recession. If you know what to do, if you have the right plan to set up, you can make a lot of money from this.
Hey there, hope all is well. Back at you today with some more RT News updates. And as you tell from today's title, there's over 1 million U.S. consumers that have fallen behind with their car payments at a time where we're supposed to be at a nice economic recovery or something of that nature. And so I got a couple articles I want to share with you today. But before I dive into those articles, as always, I want to encourage you to click the subscribe button for more RT News updates, as well as interviews and live talks. And if you're new to RTD, I want to encourage you to take the time to visit the RTD University page, where I put together all my prior interviews dealing with monetary matters as well as fiscal policy and the importance of having sound money in this day and age before the next recession. So without further ado, let's dive into today's articles. So as I mentioned, I have 4 articles dealing with what's happening in the auto subprime area. And so it's unfortunate it's only been 10 years since the last subprime meltdown dealing with mortgages, but it seems that we're approaching something similar with the auto loan, and the fact that there's been a lot of these bad debts and whatnot that's packaged together as securities that's been sold into the market, and people are investing in those things. So as always, I want to share these 4 articles with you, but yeah, I want to scan through the surface, give you something to think about, and if you're interested in reading more, feel free to scroll down below and to find out more for yourself. But let's dive into the very first one. Here we have from Financial Times. It says 1 million U.S. consumers behind on car loan payments. Next one here from CNBC. It says Americans borrow record amounts of auto loan even as interest rates rise. Next one here is from Detroit News. It says car loan rates expected to rise. And the very last one here is from Bloomberg, and it says subprime auto debt is booming even as defaults soar. So just to thumb through the very first one here, give you something to think about. It says more than 1 million U.S. consumers have fallen at least 2 months behind on car loan payments as the delinquency rates reach its highest level since 2009, in the latest sign of stress in the 1.1 trillion market. It says delinquencies on credit cards also rose by about the same amount over the period to 1.79%, the highest since 2011. It says the rise in bad loans comes despite persistently low borrowing costs and unemployment levels, says suggesting lenders may be letting consumers take on bigger debt burdens than they can handle. Says lending to consumers with weak credit scores has been one of the fastest growing parts of the industry. So that is called predatory lending. You're letting someone who you know can't afford that payment acquire a car. That's vicious. It says separate figures published on Thursday by the New York Federal Reserve show the total amount of debt held by American households rose last year at the fastest clip since 2007. So, Federal Reserve reported that consumer debt has risen faster than in 2007, and we all know what happened in at the end of 2007, leading 2008. It says increase in all the main categories from mortgages to student loans pushed the total up to $460 billion over the year to $12.58 trillion. It says only 0.8% shy of a peak reached in the third quarter of 2008, the height of the financial crisis. Next one here says Americans borrow record amounts of auto loans even as interest rates rise. So I'll give you some statistics here. It says the average new vehicle loan hit a record high of $31,099, Experian said. It says for used autos, the average loan rose to a record of $19,589 for a used car. It says in the fourth quarter, the average monthly payment for a new vehicle hit all-time high of $515. It says the average used auto loan payment was $371 per month, also a record. Give you a little idea what's going on here. It says the jump in payments and loan extends the trend of consumers paying more and taking longer to pay for the cars and trucks they're buying. It says on average, Americans are extending a new car loan over 69 months, according to Experian. The report shows the average used vehicle loan has a term of just over 64 months. 64 months for a used car is ridiculous. You're buying someone's problem, taking on that problem, and then you're carrying that problem on for 64 months. But yet, the idea of having something new in your possession right now, I guess, is worth it for some. More information if you're interested in reading below. Hey there, just want to take a quick minute to interrupt this video to remind you to visit the RethinkingADollar.com website, where you get a chance to see all of my postings as well as educational resources, and as well as visit the RTD store where I have some free material for you as well as some t-shirts. And if you're interested in being more of a blessing to Rethinking a Dollar, I want to encourage you to visit the RTD donation page where I have a couple links there for you to contribute to this alternative media work. Other than that, let's get back to the show. Next one here from the Detroit News, it says car loan rates expected to rise. So give you an idea what's going on here. It says the Federal Reserve raised the interest rates the banks charge each other for loans for 3 times in 2017. It says most recently from 1.25 to 1.5%. The Fed already has telegraphed it is likely to raise the rate at least 2 times this year, possibly 4, and further increases could trickle down to the car buyers as car makers find they subsidize ultra-low loan terms. It says in the 12 months leading up to January, the average interest rate for a 60-month new car loan was relatively stable, rising from 4.35% to 4.51%. It says according to Statista.com, that translated to a modest hike in monthly payments for a $34,968 car. It says which was the average price of a new car in 2017, according to Kelley Blue Book. It says the monthly note on that car rose from $688 to $691. So that $3 raise within that time frame based upon those interest rates is minor. But yet if the Federal Reserve does, as they say they're going to do as far as look to raise rates as they are quantitative tightening, unloading their balance sheet, it's good to say that that price will go up even more. And so the borrowing costs will go up more. So if we already have a massive amount of delinquencies and you got higher costs, that spells trouble. More information below if you're interested in reading. Very last one here is from Bloomberg, and it says subprime auto debt is booming even as defaults soar. Give you an idea what's going on here. It says it's all happening in the market for subprime auto bonds, where loans to American consumers with some of the patchiest credit histories are packaged into securities to be sold to big investors. It says a decade after risky mortgage lending toppled the U.S. financial system, the securities have barely been so popular. It says, but the collateral behind the bonds is getting less safe. It says car owners are increasingly falling behind on bigger loans with longer repayment terms made against depreciating assets. It's quoted as saying, as used car values drop a bit and delinquencies and roll rates begin to increase, the subprime sector will show significant underperformance and lack of decent liquidity. So that's what's happening in the news now. So we have just the idea that, you know, we're not even in an official recession as of yet, but yet there's so many things that's falling apart at the very seams that kind of mimics what happened prior to the subprime mortgage crisis that happened in 2007, 2008. So here we're just talking about auto loans. We're talking about people who have chosen to go out and to acquire the very best or to acquire what they feel they can afford or can't afford and getting access to those cars because we're in an easy credit environment for now. And so if they can't afford to make their payments now when things are supposed to be going well, imagine how things will be very tough when we actually enter a recession and we experience massive job loss and the things that happen from there. So just want to shine a little light on this subject matter here. I would love to hear your thoughts on this whole auto subprime mess that's unfolding. Leave a comment below with your thoughts. As well, if you find this to be informative, please share this information with your family and friends so they can find out what's happening in regards to our monetary system and the financial matters dealing with our national currency. So other than that, hope all is well. Enjoy your day. Look forward to bringing you more news updates in the future. Thank you.